but many, many movers in story stocks, some of which are moving in a big way. Jenny Horn, host of Next Gen Investing, is with me talking about Constellation Energy jumping big time on a nuclear deal. Let's hear about this one.
I know, a nuclear deal with one of the most interesting competitors in AI being Meta Platforms. So Meta did announce signing a 20-year agreement to buy nuclear power from Constellation Energy, continuing the wave of tech giants right now trying to tap nuclear as well as other power needs, really, sources as a result of the need because of data centers. So beginning in June of 2027, Meta will buy roughly 1.1 gigawatts of energy from Constellation's Clinton Clean Energy in Illinois, which is the entire output from the one site's one nuclear reactor. The company did say the long-term agreement will be supporting the operation of the plant as well as the overall relicensing. Without this commitment, though, from Meta, the plant was in danger of closing when its zero emissions credit, which it relied on since 2017, expired. So they did say they're a proud partner of Meta. Sometimes the important part of the journey is stopping to take a step backwards in terms of finding these new sources of energy. That's per Constellation's president and CEO. Now, in terms of the deal, which will also expand Clinton's output by about 30 megawatts, were not disclosed. The plant will not be powering Meta's data centers directly. Instead, it will continue to provide power to the regional grid while contributing to Meta's goal of being 100% clean as far as its energy consumption and output. So we also have seen other companies following suit. Google did just recently pledge the development of these 3 new nuclear sites. We also have seen Amazon, which has had an ongoing discussion with various ways they can find other sources of power, because as we know, the grid, how it stands right now, is not able to support the growth that's needed and expected that we're anticipating from AI. So definitely good news, but the big beneficiary today is Constellation, which is up 15%. After seeing some volatility this year, a lot of these alternative energy companies have seen a bit of weakness, but I will say that from looking at this chart, it's still been an outperformer on at least the year versus the S&P 500.
All right. And next up, Dollar General, which is higher after its earnings. I know we're going to be hearing from Dollar Tree tomorrow. What's with Dollar General today?
The Dollar General, the story, I think, was that things were better than feared. There wasn't a lot of optimism going into this report. I know that this name has made a pretty decent recovery back from lows, but all of the sell side yesterday seemed really downbeat on what was now a pretty good report. We saw shares soar to a 9-month high in early trading, boosted by these first quarter results, easily exceeded top and bottom line forecasts. The results did come even as the company acknowledged that the highly dynamic tariff environment could continue to put pressure on its core lower income consumer. So as a result, they did highlight the net income for the quarter still rose about 8% year over year. Also did see revenue that jumped on a year over year basis at $10.4 billion. They did also beat consensus. Also did report an increase in their same-store sales, which this is remarkable because this has been such a challenged metric for retail this quarter. We did see about 2.4% for same-store sales. Street was anticipating around 1.5% growth. Now, they did also right now raise some of their expectations for the year. They did give slightly higher now full-year earnings guide as well as slightly higher sales forecasts. The updated guidance, though, does assume that Dollar General will be able to mitigate a significant portion of the potential impact of the cost of goods from tariffs at currently implemented rates. So basically, they're saying what every other retailer and consumer-facing company said this quarter, as long as things stay as they are, we are able to consistently perform and actually slightly even outperform our own expectations. All that could change, obviously, if we see the tariff situation further worsen for Dollar General, as they are a discount name, of course, and so heavily exposed with very, very thin margins for their cost of goods.
Yeah, I mean, I'm waiting to see the jobs picture, the wage growth numbers we see here. We're seeing 3.7% is the estimate for year over year. I mean, will people have jobs? Will they be spending, et cetera, et cetera? I mean, great to see Dollar General here shining. Not every retailer did exactly that, but some of these numbers are definitely impressive, and we'll hear from Dollar Tree tomorrow. Jenny, final thoughts?
So I completely agree. And I also think that when you think labor force, that you have to think of the entirety of America, which is, a lot of these rural and maybe just non-urban type locations, which is really their bread and butter. So I think that it's encouraging to not only hear from like luxury retail and some of this more frivolous type retail that we've already reported on. It's nice to hear that these discount names that do serve like 60% plus, I believe, of the country right now are like saying that that's one of their primary grocery stores. I think this is a strong read for that consumer that maybe isn't always as appreciated by the street.
All right, Jenny Horn, great to see you. Thank you so much. And we'll have a slew of earnings and story stocks we'll continue to cover throughout this week. Thank you, Jenny.